Hello, Market Club members everywhere. It's Monday. It's the 14th of March, and we're seeing a little bit of a pullback in the gold. I want to put in the Fibonacci numbers already in this market, but I want to show you a couple of things I've noticed when I was looking at this over the weekend, and that is the divergence that we're seeing in the RSI. So you can see, if you look, this is a close-only chart of gold right here, but this is the RSI. You can see how this is going down like this, and look at how prices are going up like that. So it meant really they were really unsustainable. This is a divergence. We've broken below the previous low here, so that's an indication that we may be going down to the 50 line, where we should find very, very good support for gold. So that's more important, the 50 line, as opposed to some of the retracement levels which I put in. Potentially we could get back to maybe the 116 level right here, and that's a 23.6% pullback, and maybe even a little bit further down, maybe the 114 area. So let's see how that plays out. But generally speaking, I think we're going to see a corrective mode in our trade triangles. I'm just going to show you our latest trade triangles, which we've been out of the market on our dailies. You can see that, but the weeklies and the monthlies still positive, indicating longer-term positive trends. So more of a trading range right now, but I would say generally be on the sidelines and look for a buying opportunity as we come up and watch the daily triangle turns green. You want to be a buyer. This is crude oil. This gave us a buy, sell. This is crude oil. It gave us a sell signal today at 37.21. That was a nice profit. We got in at 34.69. It's about a 70% profit based on the margin of about $3,500 to trade a contract of crude oil. Generally speaking, I think we can see this market come down again, a little bit of a divergence. We showed you that in gold. Pretty much the same thing here. You can see how it's sort of angling down like that on the RSI, and prices are going up. That's not a good sign, okay? So I think we could come down possibly to the 50, 60 level, around these levels, these previous tops right here, about 50 to 60, and should find support. But longer term, we think this market has made a turn, and it's going to go higher. So let's see how that plays out. The other thing to look at, and I'll clear the screen here, and that is a long-term trend line. You can see we start from here, we push this down here, and you can see basically we just about touched it, and we're turning back down. So it's going to be this previous high that we saw last week is going to be very, very important. If we go over there, then this is going to change the whole tenor of this market and break this trend line that began in September of 2014. So let's watch that very carefully. We're looking at the Dow, and you can see quite clearly we're just a little bit higher for the day, not much. I think this probably, I'm not so excited about this market, but I did want to show you this in the Fibonacci level. So let's go to a close only chart. Just click right here. That turns into close only, and we'll do a Fibonacci from the highs to the lows, close only. So this is what we were talking about before, and that is we were right in the sort of zone where this market is going to have some problems, because we're back up to these old lows right here, and I think that's going to be a challenging thing for this market. So let's see how that plays out. It should be more of a two-way market this week, but obviously we'll have to see how things play out. But generally speaking, this level right here, I would say, is going to be around the 17,200 level is where we are right now. I think that's going to be a problematic area for the Dow, which is the strongest of all three of the indices we track. Looking at the S&P, obviously a strong day on Friday. Nonetheless, we're still in an area where we're getting back to these previous lows, which I think really are going to be a potential problem, and that is right here. You can see just these lows right here. We just draw that across. I think that's going to be some sort of resistance level. And remember, if we take this out further, we think the market has been building a massive top. You can see that clearly. We've talked about this before. This is starting quite some time ago. This whole area looks like a massive top, and to either we're going to do one or two things, in my humble opinion. We're either going to go sideways for quite a while, or we're going to start to move down. And my odds favor right now with the trade triangles, it's going to go down. Last market we're looking at is the NASDAQ, and let's just look at a 6-month chart on the NASDAQ. You can see it's not quite so strong. If we put a Fibonacci retracement level on here, you can see that it's really just getting back to the 50 line has been a challenge. So it's still below the 61.8% Fibonacci retracement. So this is definitely the weakest of the three indices. Likewise, we've got our trade triangles, which are still longer term negative, Both the daily and the weekly are up. More importantly, it's meaning it's a trading range. It's a plus 70, indicating you should be on the sidelines. I just trading this on a very short-term basis. Hey, I'm Adam Houston. It's going to be an interesting week this week. Let's see if they can follow through with more strength in the NASDAQ, S&P, and the Dow. I'm not so sure that's going to happen, but we'll have to be convinced. Let me put it that way. We think gold is going to be in a corrective phase and more of a corrective phase in crude oil. Let's see what happens this week. I'll be back tomorrow. Have a great trading day, everyone. Thanks for watching.